Is the Federal Reserve about to panic? Well, according to many experts, they say yes, the Federal Reserve will panic because that is just what they do. Well, we will see. But I think we can all agree that the U.S. economy is in a bit of a free fall, with the Fed questioning their decisions now, with Congress understanding that a debt ceiling crisis is coming very soon, and with the American people losing value in their money. But I have a question for you. Now, this is a very important question. I was recently at an airport and I went to buy a bottle of water. Now, in this little store, they only had self-checkout. But when I took my bottle of water to the self-checkout, the machine automatically added a 20% tip, unless you hit the little button on the side that declined it. So here's my question. Would you tip 20% when there's nobody there that helped you? I don't even see anybody, any employee in the store. So essentially you're giving a 20% tip to the store owner? Would you have tipped 20%? Answer that question. You can also answer that question in the comment section below. Say no, I wouldn't tip, or yes, I would tip 20%. Now, the reason I bring this up is simply because here in the United States and really across the entire globe, there's a shift away from workers and towards technology. I like technology. I think this is going to be the way of the future, but tipping a machine is a little odd to me. The other reason why I bring this up is because of the two big updates this week, and it has to do with our money. The first big update is going to be today. President Biden is going to be meeting with the 4 congressional leaders. He's going to meet with them at the White House today to discuss the debt ceiling and the possibility of a potential default. The other big update is tomorrow. Tomorrow on a Wednesday, May 10th, we will find out what our inflation numbers are. We will get the new CPI report. That will be a very big day. Now, let's address some of these things, because both of these big updates are going to impact our money. Whether it's money sitting in the bank, whether it's money currently we have in our hands sitting under the mattress, doesn't matter. It will impact our money. So let's talk about the debt ceiling first. According to Republican Senator Bill Cassidy, he says a short-term debt increase may be needed in order to buy Congress more time. This negotiation is taking a little bit longer than many expected, especially being that President Biden came out and said he would not negotiate, that he wants a clean bill, no restrictions, no spending cuts. Well, at this time, he still says that, but according to the reports today, President Biden would be open to negotiation, but it depends on what Republicans want to cut. Again, I bring this up because a couple of things that Republicans want to cut. They want to get rid of President Biden's student loan forgiveness plan. Well, that would be about $400 per month that people would have to pay in addition to what they're already paying. Not that the student loan payments are going up, the student loan payments are coming back because pretty soon the payment pause expires. The second thing, and again, there's other cuts in here, but the second thing has to do with food assistance, nutrition assistance, food stamps, SNAP benefits, EBT. These are things that are going to see cuts or reductions. We are going to see a work requirement get added back. Again, these are things that people don't want to see because it cuts into the amount of money they get every single month for food. But this is something that we are likely to negotiate. But this negotiation is simply going to create a ripple effect across the entire world, not just in the United States, the entire world. Here's another crisis. And this crisis, again, has a ripple effect that will be felt all across the world, not just here in the U.S. Currently, the Federal Reserve is fighting inflation, and they're doing this by raising interest rates. Smart move. Interest rates went down to zero, right? We started to spend. We started to give stimulus checks and PPP loans and all this stuff, and then inflation rose to 9.1%. Not good. Well, we in that time frame have gone from a 0% federal funds rate to now 5%. This is obviously a major change, and it is tightening lending, causing a credit crunch. Now, remember when I said that I went to the airport, bought a bottle of water, and they asked for a 20% tip? The machine did. Not a person, a machine. Well, this credit crunch that we're in, it's causing a lot of panic. Not only is this causing banks to suffer due to unrefinanceable loans. For example, hundreds of billions of dollars in commercial mortgages. But the people that are using credit, they just don't have it. They're overpaying for bottles of water. We're overpaying for travel. We're overpaying for insurance, rent, utilities, you name it, it's gone up. Now, this is why some economists believe the Federal Reserve is going to panic, and they are actually in panic mode right now. Because with the Federal Reserve raising rates, this is causing credit to get slashed everywhere. I even had some of my credit cards get reduced. It's just the way it is. Now, I was talking to a business owner just the other day. He said that his lines of credit for his business were slashed. His personal credit cards were pretty much cut in half, or his spending limits. His cash out refinance on his home was then denied. And because of all this stuff happening, he's unable to run his business. All because these three things. That's what we're going to see. But think about this for a second. And this is why the Federal Reserve is going to panic. This is why some believe they are in panic mode at this time. Because when a person uses credit to spend, it's usually because for most people, it's because they just don't have the money. They don't have the cash available. So a person is going to use credit to spend, to buy things. This is paying the income of the other person. So I go into a little store and I buy a bottle of water. Let's say the bottle of water, the store gets it for 50 cents, but they sell it for $2. That means $1.50 profit. Well, some of that money is going to go to pay for the income of the employee, the manager, the maintenance person, the janitor, whatever, right? Some of that money is going to pay for their salary. But when credit is reduced and I can't go into that little store and buy a bottle of water for $2 with the 20% tip, I just don't want to spend that and put that on my card. Well, guess what? The amount of money out there has been reduced. So the money that I was going to spend that is needed to pay that person's income isn't there. This is getting reduced. And this is the problem. This is why a credit crunch is such a big deal. And I don't think a lot of people understand how important credit is in our economy. We use credit for everything. Businesses use credit to buy goods. They buy it on credit, and hopefully they will sell it fast enough that they get the money from the customer and can pay their vendor. They don't have to use their own money yet. Okay? Now, all this stuff is going to result in a slowdown in our economic growth and spending. But not only that, we are going to see even more layoffs in the coming months. Just wait. According to experts, they say as credit becomes even tighter, the amount of layoffs will increase to remain balanced. Think about that for a second. If credit tightens even further, we are going to see layoffs increase in order for our economy to remain balanced. Think about that. Because again, this is a huge problem. This is one of the reasons why experts believe the Federal Reserve is in panic mode. Because they know they've either potentially over-tightened, which again, I've said this before, if the Federal Reserve over-tightens, we see inflation come down and come down substantially, and the U.S. ends up in a recession, there's a good chance we will see more stimulus. So again, there's still a lot that we need to get out of, a lot of issues that we need to resolve. But as of right now, I promise I will keep you up to date on everything that's going on. All you got to do is do two things. First off, hit that like button on this video. Also, click that subscribe button so you never miss an update. That is what I got for you guys today. Thank you guys for watching. I'll see you guys on the next one.